Straight to St George Bank and Simon Mariner standing by to talk plenty of things on the economy for you. Simon, warm welcome to the Business Channel. Can we reflect on Governor Glenn Stevens, RBA Governor? This is a front and centre testimony taking place in Sydney as we speak. Overall, you could argue that it's a fairly bullish outlook, distinctly better, Mr. Stevens saying, on the global economy than a few months ago. We're weathering the storm quite well. Are you seeing it in quite the same light?
Look, certainly, as you said, RBA Governor Glenn Stevens speaking right now is a semi-annual testimony to Parliament. Look, we saw the RBA's quarterly monetary policy statement print just last Friday, so not really expecting to hear much that's too different from that. The economy amazingly resilient. Over the last month, we're seeing retail spending trending higher. We're seeing plenty of consumer confidence. Unemployment creeping higher, although albeit at a slower pace than economists forecast, and housing finance marching on as well. So lots of bullish economic indicators there. It's really the Q&A session afterwards when RBA Governor Glenn Stevens does finish speaking. I think most investors will be keeping a close eye on that to try and give them some sort of indication as to the outlook for monetary policy here.
All right, well, he kind of could have let the cat out of the bag on that one already, just saying indeed that another quarter of contraction is possible. Do you agree?
Well, look, it seems that we have avoided a technical recession. The last month, which is certainly consecutive quarters of negative growth, I think the economic data flow will really determine what's going on. There has been a bit of a paradigm shift, you could argue, in the Reserve Bank or the central bank stance on monetary policy, arguably moving from an easing bias to a neutral bias this very month. Interestingly, financial markets or interbank futures are pricing in 141% likelihood of a rate hike before the end of the year. Our view here at St George is that that will start perhaps early next year, but you can't rule out the possibility of a hike before the end of the year. And don't forget, just this time last month, we were seeing people factoring in fact a 25-point basis cut, so a complete turnaround there.
When you hear the governor as well just dropping on the wires saying there's a high margin of uncertainty around all these forecasts, does that resonate with you? In the office, are you kind of fence-sitting and seeing it one way one day, one way the next?
Well, certainly markets have moved around quite a bit of late. Look, we do see some great earning results. We do see some interesting data printing, and you know, sometimes some revised data prints from month to month. So it's pretty difficult to sort of pin it down and tell. What you can sort of really hang your hopes on, undoubtedly, is the resilient growth we're seeing coming out of China, which is sensational, and there's no denying that. Certainly, if our Aussie dollar, which is a great barometer for risk appetite globally, is anything to go by, this week we've seen about a 200-point or a 2-cent range, which is quite amazing. Dipped below 82 US cents this week, currently sitting around 84.2 US cents now, which is only half a cent off 2009 highs. So they're a bit of an indication in risk appetite and consumer confidence improving.
Yeah, not good for our exporters though.
Certainly not, but I think, as I said, investors and speculators even more will be looking closely at the RBA Governor's speech today and the Q&A after to try to get an indication on, if not what the next move will be by the Reserve Bank, but when the next move will come from the Reserve Bank. Certainly a widening in those interest rate differentials between us and the US will see the Aussie dollar move to higher ground.
What is this code for saying I'm open-minded when it comes to policy? What is that double speak for?
Well, I think maybe just keeping a little bit of a gunpowder dry. Look, it's difficult to see how, if economic data continues to present in the resilient fashion that we've seen in Australia, how we can see another move lower. You know, the market, as I said, certainly seeing that we have turned the corner and the next move being up, but maybe that's a little bit more to do perhaps with a little bit of flexibility around sort of timing.
Sounds like that Q&A is going to be a dead duck. He's just said, I don't want to give any particular steer on the timing of any tightening. Your response?
Oh, well, I suppose, yeah, as you suggest, he's trying to keep his cards close to his chest and give himself an opportunity to, move with some flexibility. We do tend to take a strong lead from our US cousins overseas. We've had a raft of positive and optimistic data there just yesterday. Their Federal Reserve coming out saying they're seeing signs of a tentative economic recovery out of the US. Although last night a couple of major benchmark indices slipping in the US. We saw retail sales come off by 0.1%. Also, a report on the number of Americans filing for jobless claims rose. It rose by more than economists expected. So maybe a little bit of a tempering of economic recovery prospects coming there from obviously the world's largest economy. And that's going to factor certainly into some of the thinking that RBA and our central bank has around their monetary policy and their moves.
Of course, that is a backward-looking number, as you know. Are you more eyeing those retail sales and wanting to see a turnaround there? Is that the key trigger for you, or is there another print on the economy you eye more closely?
Well, I think that they all do certainly feed into each other. Something that will be closely looked in the US tonight is going to be core CPI inflation figures. That's really the major index on most people's radars. But also industrial production we will see from the US tonight. Traditionally not the most sexy of economic indicators, but interestingly in the last 4 decades you haven't seen a marked improvement in the growth prospects of the US until you've seen those industrial production figures print a little bit higher. So certainly one to keep your eye on.
Simon Mariner, finally, if you could be a fly on the wall at that Q&A with Governor Stevens, what would you be asking?
I think really just a focus on how the resilience of the Australian economy. It seems that we've just weathered the storm just so brilliantly. The globe has just gone through a crisis, a recession, the worst we've seen since World War II. It'd be really interesting just to ask as to insights as to why we've kind of dodged a bullet or weathered the storm so well. And in doing so, if the RBA or the central bank does have to get back to that neutral cash rate, we're down at 3% now, and certainly you could argue that there was some emergency cutting factored into this easing cycle. If we've got to get back to that neutral cash rate, that 5.5% perhaps hypothetical neutral figure, how quickly and how aggressively perhaps would he see us moving back towards that?
And that delicate dance between fiscal and monetary policy, Governor Stevens saying the board had to be mindful of stimulus already planned, i.e. events in Canberra, right? Yeah.
Certainly.
All right, Simon, nice and nimble there on your feet. Appreciate your contribution. Have a good weekend.
You too. Bye.
All right. Simon Mariner from St George. We're very close to coming online for you now.